There we go. We gotta go live. Go, go, go. Alright, looks like we might be live. Waiting for me to join. I have joined. Holy smokes, it is hot out today for me. Man, I don't know where you guys are at, but we've got for Seattle area, we've got a high heat warning, and I'm not used to it being from Washington. Um, Growing up, like we would have one day a year, maybe that was like 90 degrees, but holy smokes, we're supposed to have 100. Global warming is a thing. It's gotta be, right? I think. So I was actually just going over, making a little slide, keeping track of my Tilray wheel, which I decided to run on. 2 more minutes. Sorry, it's hot. Yeah, I got the AC. What's up, Pedro? Is it super loud? Is it AC? But I was just going through these. Let's see, where can I hit the? Okay, got it. I was going through my Tilray play, and last week, I don't know, can't remember if I put this up, but like last week, my very first week, we were down a total of $320 on this little wheel that I'm playing. Started with $4,200, completely separate, and then decided we were gonna sell some additional calls and puts. I should change this to what I actually sold. I actually ended up selling the 1850s because Tilray dropped right before the beginning of the week, and we didn't add 90, we added $87 worth of cash to it, and this is where we're at. This is just 2 weeks of running the wheel on pretty volatile stock on Tilray. So previously we had $500 cash. We added or 600 when we counted in the premiums we collected last week, or the first week, and then we sold. On the ones that we sold, we grabbed another $87. So far we have $587 cash, and then we're still holding our 200 shares of Tilray, which are up quite a bit from the beginning of last week. So those shares right now are worth $36.24. So this puts us at a total the 600 or the I didn't update this, but anyways, it should be $687 worth of cash, plus the plus what the shares are now valued at. So we're up $111 on a stock that is down from where we purchased it and way down from where we started selling them. And the next week, what we're going to do is we're going to roll into just selling some more premium. My plan for the third week is I'm going to sell calls on the 200 shares that we own. So we should grab an extra $34 for each 100. So that'll be, $68 with slippage and what I actually get filled by Monday. Maybe a little bit less, and then sell a $17 put using the collateral that we have. So we should add another $100 if everything stays between 17 and 20, we should just be up basically another $100 worth of cash to it. So, um, this is just going to be a third week, but I see, a few months down the road, we should be able to start selling an additional put. If we're gaining about $100 a week, it'd be 17. Let's see, we need about another $1,700 before we can start selling another put. So that would be, that'll be 3-4 months, just depending on how things go. Oh, you've got your AC on too. Yeah, I know. Where are you from? Where are you guys all from, anyways? I can't live without AC, and um, I'm 100% going to put like a whole house AC in. I can't sleep without it. California, Philadelphia. I've never been to Philadelphia. What part of California? I spent like most of my. I actually was born in California, and spent every single summer down there. My Most of my family lives in like Huntington Beach area, and I spent all the summers. Oh, nice, Palm Springs. Yeah, my aunt owns a house in Huntington Beach. So when my sister and I were kids, we would just stay down there. My cousins all worked at Disneyland, so that was all pretty cool. Yeah, California, man, it's hot, but it's definitely like way drier than it is here. And at least you guys like can go run down to the beach, like that's huge. And I want to go to our East Coast so bad. I can't wait. Like I don't know, but it's always hard. I love traveling outside of the country. Um, and every time I think about like taking a plane trip to the East Coast, I'm like, yeah, but like 4 or 5 more hours, I can be out of the country and over to Southeast Asia, which somewhere like third world country-ish is super awesome to me. All right, played Iron Butterflies this week. CCIFE. Okay, so your mid price was 23 and a half. Robinhood sold the long leg of my 24 and left me with a sold call. Um, so no, how can you avoid no? And let me see. Did you say? Did it? I assume that it was something that expired this Friday. So, so we're talking about like when you have a play that's expiring, Robinhood will 100% automatically close it if they think it could possibly get exercised. If it's super far the money, it won't. But an iron butterfly is always going to be. So you're not going to be able to play it like right down to that last hour. And I think when did it start closing? It started closing it like an hour or an hour and a half before the market closed. Right? It says like we have initiated the closing process on this, and basically they're trying to protect you, and there's no way out of it. You can't opt out of it. And then when you see it, it will sell like a leg at a time once in a while, and you'll just see it close out. So it sucks. I've had the same thing happen. I had a really good play on the SPY, and I didn't know about it at the time, and like I wasn't watching the position, but I was watching the S&P, and then I was like, awesome, this landed exactly where I need to, like everything's all good. And then when I looked at it, I was like, where's my position? It's gone. And that's what happened. They close them out automatically, and they don't say exactly what you have to look at it, but it's like at if you're at risk, that's just like what they call it. They don't define it, but yeah, that's something that you have to live with Robinhood. You can with let's see, you'd have to move over to like TD Ameritrade. I have no idea about Webull, and Tastyworks. You can do it, but I think you have to specifically say, like, there's a setting in there, and you have to specifically say like, hey, I don't want you to mess with this. I know what I'm doing. I'm pro. But like, I mean, if you had, oh God, no data. Um, but if you had a situation where like, a call was super far, like if you were in the money on a naked call, and then you didn't pay attention, it could just expire where you have to sell it or exercise it in order to get all those gains. So like in that situation, it would very much protect you. But since everybody and their grandma is on Robinhood, they're just trying to do what's best for you. So like zero DTE stuff on especially iron butterflies, or even like narrow iron condors, you're not going to be able to do them. I mean, you can, but you're not going to be able to play them out until closing. And no, margin would not have saved you. It doesn't matter. I have margin. And for me, it was a broken wing butterfly. Actually, on mine, everything would have been good, but nope, can't do anything. Yeah, and advice on how to avoid it: you gotta switch brokerages. Like Robinhood is our training wheels, our training wheels basic brokerage. I mean, we can, you can see we can do a lot of things on there. We can make some cool plays, but it's not. It's definitely not like, it doesn't have all the options. We can't say, hey, we know what we're doing. Like, leave us alone. You lost 100 shares of CCIV that I wanted to hold. It was at 1.2, not only 1.1. Man, you're long CCIV. Awesome. Yeah. How is CCIV doing? I saw some talk about it, but make sure. Cool. $25. Jesus, can you believe they were $60 at one point? I mean, that must be the fair price, right? Let a ton of people down earlier this year, but I have big faith on it. Bought it. Oh, that's good. Oh man, so you okay? So when you got it, nice. So you like practically bottom ticked it. I mean, I don't know if if you're super into it and pay attention to everything. I think the big thing was like right. What was it, like the day after they SPAC? That's what did it. That was like one of the triggers for me for getting out of CCIV, is that day after they SPAC'd and then they changed their production, and I think that was kind of shady on it. And then looking through, I mean, they're gonna have a rough time financially. I believe this is my take, and I haven't looked closely at them since they SPAC'd, but it's gonna be a few years of difficulty financially for them. It looks like unless everything goes wrong, and it seems like they're very management top heavy. So like from the business side of things, cash flow, I think it's going to be pretty rough. But well, up until the new Model S, but no, I won't say that. But I think the one thing that they super have going for them, which is why I like them, like I like CCIV way better than why am I calling them CCIV? And now I'm gonna forget. What are they called? What's their thing? Lucid. I think the one thing Lucid has going for them is they're not like Neo or anybody else that are just trying to make little commuter cars or anything. It's since they're actually going after that luxury market, I think that's absolutely huge because, uh, like, obviously, I haven't seen the new refreshed Model S or X or anything, but I've driven the old one, and the old one, it's a nice, comfortable car, but it would be more comparable to like an old, I don't know, I don't know, just like an old, bigger car, like a nice Volvo or like an old Lexus or something like that. But it doesn't have that premium luxury feel like a Mercedes or Lexus or something like that. So there's definitely a hole in the market, which I think is super smart of them. If you're gonna go somewhere, you might as well go there. Um, but I don't know what the new Model S does to that. So, man, that's pretty cool though. Is that your biggest position? Is Lucid? And I give you a lot of credit for that too, because that's like how I am. Like my, I don't know if it's like a big percentage of your portfolio. Yeah, nice. Um, but I love being like super heavy into stuff that I believe in and I know. And the biggest thing to me is if you like it that much and the stock drops, if it drops down to $10 or, I'm not saying that would happen, but if it drops like way down, you're actually happy to buy more and you're not like, oh crap, since you're looking 2 3, I don't know what your outlook is. I feel like it's got to be, I feel like Lucid has to be a minimum of maybe like a 3 to 5 year play before we see where it's going. Is my gut on it. Yeah, and then you can keep, yeah, 3 to 5 years. Yeah, nice. So what we've had like some 26s, some 17s. Man, you just got it. You hit it. Were you like were you waiting for that? Waiting for the dip, or you just happened to get into it at that time? Oh my gosh, I'm gonna need more water. Too dang hot. Actually, I'm running on only a few hours of sleep. My girlfriend and I went to casino last night, and um, and it's kind of funny. Like, I I guess I would compare it to somebody like holding holding something worthless, but she will like all in and keep going until her last penny. So she either walks away a winner, um, or with absolutely $0. But I think we left there at 6 a.m. or something. Just nuts. But the good thing is I got back the money that I had spent on some YOLO debit spreads. I mean, I got that. That was about my winnings. So this has been so your last like man. So your last month been looking pretty good. Very cool. Are you planning on owning one? Are you gonna buy one of their cars? I'm gonna go look at some of my comments too, just because I know there was some stuff that I wanted to address. So we have some stuff to talk about. Unless you guys have anything specific. I'm excited. I'm super excited to go like these next few months um, with my Tilray wheel. I don't know if you caught it like last week, but my buddy has been trading it for a year. Like when it was Afria, that's all he's done since he got into it. Like studied it, practiced it, paper traded it, um, and then he's into weed. So on Afria, he started. I don't know. He started like with 25 grand or something, and then put like another 50 in. Like used um, whatever that loan you can get on your house, you know, the equity loan. Use that, and then it is, I don't know. I think he's made 50 some $1,000s on Afria and now Tilray. That's why I decided to use it. Plus, it looks like a pretty volatile stock. We get pretty good premiums. Doesn't seem horrible. Seems like if you're going to be in that field, might as well. Might as well be that one. Let's see. Where can we get over to? My channel. I don't know, man. Oh, like as far as the gambling stuff, though, I don't know. I don't know about best way of getting a result. I can say more often than not, we walk away and it's thousands of dollars. Goodbye. All right. Where is my comments? Oh, am I not in studio? There we go. I did well on Fubo. Sold 200 shares. Yeah, that's the only thing that sucks about Fubo, or not Fubo, but running the wheel, and that's why if there's something I want to hold, it's so hard to sell the call on it. Like that's the big, that is like the most perfect thing about Tilray for me. I don't mind owning it. It's not something that, oh man, I've got to have this in my portfolio. So, and I don't love it, so I'm fine. I'm fine either way. I'm fine holding it, and I'm fine if they get the shares called away, like 100%. And that's like every single other stock that I own. Maybe not all of them, but the majority of them, I want, and I don't want to get them called away. Like, let me keep my shares, because most of them are things I believe in, and some of them I just like opening. Oh, let's see. So I'm just go through some of the comments. Benny was asking me, when I average down and roll out on a credit spread, do I average down first then roll out? Yeah, absolutely. So especially if the underlying, like if I open it up super far out of the money, and it's like, and then it has a good move to the upside or the downside on a put credit spread, and I can collect quite a bit more premium, absolutely I will average down 100% before rolling them out. And I only roll out when we're getting closer to expiration, and because I play volatile stocks, I don't want to wait to see what happens that last couple days. So either that, or I'll roll out when I'm uncomfortable with it, or when we've collected the majority of the premium is pretty much when I roll out. And yes, I do roll out calls like every single Friday. I'll roll out the calls that are expiring the next week, and I think we can grab my Robinhood account real quick. Man, it was what a great week, and then that end of Friday kind of sucked. But if I would have really taken a step back and looked at the wait, what happened to my? Oh, am I windowed? Let me see. Let me grab OBS here. Why is that above it? Oh, this is that screen recording. Hold on 1 second. Oh well, I can just move this thing over, right? Nope, can't. I need to. There we go. Anyhow, if I would have taken a step back and looked at Tesla's chart, I definitely could have seen that we needed some consolidation. So now in reality, what I'm expecting for the next week, I think we'll have pullback. I think we'll have pullback to like 650s, low 650s before we go anywhere. I think, let's see. Yeah, we can't squish that anymore. This chart looks terrible now with all these ridiculous indicators on it. But the more indicators, the more money I should make, right? But I think since we had this leg up, I think we're gonna need some. Where were we? I think we may need to pull back to the 650s before we have another leg up. What was I? Oh my gosh, what was I looking at before I grabbed this thing? Oh, Robinhood. Yeah, so all my calls that I have, as far as like poor man's covered calls, stock covered calls, whatever, I'll roll all these out. So my one's expiring next week, or the following week on the 9th, like my DraftKings, my Gap, MGM, Palantir. I'll roll all those out this coming Friday, and that's just kind of my ritual, or whatever you want to call it. Just I'll collect, another $200-$300 or so on all those plays every single Friday. I'll roll them out to the following one, and it's just that trigger, just to make sure I don't forget. The only one I did not roll out last time was Tapestry, because there's just not enough premium on it. I wonder where we ended up on Tapestry. 43-ish. There just wasn't enough premium in it to make it worth me selling, like for the stuff I was looking at. And the option chain isn't super busy on Tapestry. But man, I love that. $13 is what I paid for these shares. And we have 225 of them now, which is super cool. And I think this one's, they're paying can't remember if their dividends reinstated now. There was one of them I was super surprised that I got dividends on. Maybe it was Gap, but I think Gap too. Maybe Gap started paying a dividend too. But 300 shares at $16, half price. Good stuff. So does the theta decay help iron butterflies? What expiration would you say is the best for you? Depends what it is. I mean, butterflies are definitely super specific. And I've been using them. I've been using more long call butterflies, so I'll do them out of the money because they're so cheap to try to hit a number. And like those, some of them, like when Tesla was moving up, I wish I would have done them a little farther out of the money, because you can open them up for $100 and then they have like maximum gain, 4 or 5x what that is. Actually, like 20x, I suppose, because they'll be $100 into $1,000 or $1,200. But yeah, theta decay 100% works on your iron butterflies. It's just a super slippery slope with iron butterflies. I'm sure if you're running them, you know what they look like. I mean, it has that really narrow point where you're going to be profitable. But if you are profitable and you happen to hit it like dead nuts, you'll just make a ton. Because like, where did you, let's see, so you had the 23 2350s, and where did CCIV end up? Or Lucid, I suppose. Oh, or was that earlier or was that this week? Because if it closed it earlier this week, yeah, you would have lost. Or maybe it was last week. Where are we? 2, 3, 4, 5. Or was it last? Oh, it expired this Friday. Yeah, so you pretty much lost on the whole thing. Oh my God! But if you would have had that last Friday, let's see. If you would have had that Iron Butterfly last Friday, so you probably opened it up on Monday. Then I assume, since it was sitting at 2350, and then since we had the move up, that would have been worthless, right? You were completely negative on it. You should have lost your entire. You should have lost everything on it. So. Yeah, because you're at. Yep. Yeah, so it's just you would have had to have hit it that, and that's super narrow. Like you probably opened it up for nothing. It was probably a super cheap debit, but you would have been able to close it out for $1,000, like something ridiculous for the amount that you spend. If it would have happened to drop, but you would have had to been looking for it to drop back down, for sure. So when it closed, you probably so nothing. So I can tell you, like, nothing bad actually happened to you. I don't know if you already know that, or if you realize, like, there was nothing left in it to get. Yeah. Yeah, but those, like, you could play every single week, and that 1 week where you do hit it, open it up for $10 and you make 100 on it. They're pretty cool. Or I don't know how well you follow it. If you follow it super well and you know what its catalysts are, so you know when you expect it to go up or down in a certain time period, you can either run. You don't have to open it up at the current price. So you did open it up like this Monday, right? I assume, and then just like held it for a week. I assume it's true because that's where the price was at the beginning of the week. Okay, so like if you knew, and I don't know whether or not you did, but if you knew it was going up a few dollars for some reason, you could have played that with the center position. You have to open and close things like a little bit differently. It's a different structure, but you can play that butterfly like you could have played it at 25 or 25.50, and then you have the theta decay, and even if it's like midweek and you happen to hit it like right at that $25 midpoint, then your profit's huge. Let's actually, since we don't have much else to talk about right now, let's take a look at one of those. Let's see, CCIV. You have any idea what's going to happen? Any thoughts what's going to happen this next week? I don't. So let's say we have another, I don't know, whatever, we think it's going up another few dollars here. Ticker change is the only catalyst? Okay. Which, catalyst these days, right? Like when Volkswagen was going to change it to Volkswagen, and then the share price spiked on that. Stupid. So anyways, so normally you would come in here and you would, for your lower leg, you would sell the put, right? So you would, let's take a look at that. Let me make sure. Yeah, you can see everything on that screen. So normally, let's say you were doing it down here, you would be below the strike price, and maybe you would, or at the strike price, you would sell your 25, buy a 24, go to the call side, sell the 25, and then buy the upper one. So this is like your little total tent, right? What does this thing cost? Cost you $80, and yeah, you can basically double your money there. So this is what it looks like right now. Is that, yeah, I think we can kind of see that on the, make it a little bit bigger here. So, but if the price obviously moves off that, like it did this Friday, and everything closed, then you don't have anything, right? Because this is where you were. You just lost your entire, whatever your debit was. That was your max loss. So instead of that, get rid of these. So let's say we think it's going to go up, and we want to look at a price. I don't know, we'll pick something like $29. So normally we do that put side where we sell the one below and then buy the one below that, but we can do that same thing with calls. So what we'll do is, since it's above the strike price, if we bought a 28, sold the 29, and then we actually, oh sorry, we have to buy two of these, and then we sell the one above it. So right now it looks all jacked up. This looks like a jade lizard, but we'll have to go into custom and set a unique ratio. So that middle one, normally when you're doing the put side, you sell a put and sell a call, but instead, since we're long on this one, we would, come on, 2. Why is my numbers not working? 2. There we go. Oh, my cord was hitting a button. Let's see, buy, sell. Why does that look jacked up? That doesn't look right. That does not look right. The numbers seem pretty right, except for down here. Something's weird on this. Try it again. Sometimes, like, I've noticed when I do them a couple times. Bye. Wait, that's because I did it wrong. Buy, sell, sell, is that a 4-leg call? Yes. Let me see here. Why is this not looking right to me? Buy, sell, buy. Hold on. Long call. Oops. Buy, sell. Oh, because I didn't buy this one. Okay, my bad. That's why. Because I'm an idiot. It's not. There we go. Okay. Need to buy the upper one. It's no, it's an iron condor if the center strike price isn't the same. So, and it just has to do with the pattern here. But basically, this would be a $4 cost, and then your maximum profits $30 up here, or your maximum profits or 96. Sorry. Decimate butterfly. Do you know something about butterflies? Let's see. Okay, that's an iron condor, not a butterfly. This isn't though. The iron. So this would be a long call butterfly, and then if we widen it out, yeah. Okay, so I see what I had on before. But this, just because it has that narrow little bit, and this one you're gonna not be profitable unless it moved up. Let me make sure we can see that guy. But this is, you can see, this is a super cheap way to play this. You know, $4, you might get filled at $6 for this play, and then if it happens to get up to that $30, $30, then you've taken your $5 into 90. You're probably not going to hit that very tip top, but I mean, even if you're $5, into 35 or whatever, it can be several. I don't know, several X profit. Yeah, that's all right. It's I was like questioning it myself too. It gets because I don't play them very often too, but I can also see the pattern just to know. And an iron and a long call butterfly is super good too. So if you wanted to do that same thing where it's just a little bit of money and it's moving up to be able to capture some of it, you can do a long call butterfly where you're just widening this out some, and it's still going to be cheap. So let's see. So instead of the let's 30. So we will buy and see, make sure this one looks right. No. Come on, delay. Why am I getting these all back ass words? And I'm not sure what I just said, but long call, whatchamacallit? Iron condor. All right, so we bought, sold, sell. There's our pattern. So, well, this shows like it's zero cost, so it should be really cheap, right? $1, a couple dollars, and then you still have a maximum profit. So this is like take a couple dollars and turn it into quite a bit. So this is another way, but we also have now wider strike prices where this could possibly happen between like a $31 and a $34 closing on that date. So these are really good, super cheap, very high reward plays. And then if you have an idea of a direction, and it's way cheaper than just playing, a naked call. Not as much upside. You cap your upside, but instead of just playing, paying $20 or something for a call out of the money, if you play this, You might be able to open this thing up for a couple dollars, $2, $3, $4. Who knows? With probably $4 or $5. I think Robinhood's going to make you spend at least $5. But then you can turn that $5 into 100 potentially. Okay, so if you just did the 29.30, so one of the things are, yeah, it'll probably show no loss if they're really low cost right now, but the thing is getting filled. So your maximum loss is going to be whatever you actually pay as far as the debit. But yeah, that is true if you were to be able to buy and sell those options at that price. But what's going to happen is you're going to enter a price and offer to get into that trade for $0, and that's not going to happen. So because it's illiquid, the market's closed, the prices are not reporting correctly. Like at the end of the day, they always get messed up anyways. So come Monday, you want to open that thing up, you're going to have to pay $5 for it or something like that. So would be max loss is just whatever you pay. You don't have any collateral to put up there. But your maximum loss is whatever your debit's going to be. Okay, let me go. Okay, what is a four-leg call? I need to go back to that. What is a four-leg call? Four-leg called. So let's see. Let me read this. I need to watch a video on it because I don't understand how you profit besides a credit. A call would be bullish, a put would be bearish, but I'm lost on how else you profit. Go to, if you go to like, I mean, you can look at Investopedia, option call strat, or options profit calculator and see various combinations. There are so many ways that you can buy and sell options in combinations to form, like you can just see what we did here, right? This is one pattern that we were able to create with 4 different legs of an option, and how you profit is going to be completely different in every single situation. So some of them you can open up things that, oh my god, like that part is absolutely limitless. So you can open up 4 legs that will make you profit if the price stays the same. You can open up 4 legs where you profit only if it moves. You can open up 4 legs that profits if it goes up, but you're not losing any extrinsic value, like it doesn't decay or gain based on time. There's so many crazy things you can do. Like that butterfly, that was a 3-leg option, and all that means is we're picking 3 different strike prices. And this is like, we're looking at 2 dimensions on this, and where it gets really crazy is like calendar spreads, because that's the 4th dimension, right? So right now we're looking at just space, and this is a little snapshot of what's going to happen on July 2nd. This is what it looks like in July 2nd, but it doesn't show you that 4th dimension, like how that changes over time. We can actually look at option call strat. I love their graphs, or options profit calculator, because that's the 4th dimension, because your profitability is going to change from when you open it to that expiration date. So it's not there's a lot, man. there's a lot, but whatever you think is going to happen, like whatever your thesis is on on an underlying position, there is a play for it, like period. And I'll get into, let's see, let's take a look at this real quick. Let me open up a window, and I love using this. But let's see. we'll jump into here, but let me see what else we have. So iron condor, not a butterfly. Let's see. How can I close that before expiration? You just literally go to it and hit close. So when you open up the 4 legs, if you open up 3 or 4 legs all together, you just hit the close button. So like on, do I have any 4 legs? Oh, I do have one. So I have this guy right here where it's showing a 4 option strategy. This is actually a long iron condor. And I just have to go into this. So you can go into your mobile, and I know it's different on desktop, but the close, like I just have to hit enter a price and hit review order and close, and that's it. Think your stream is delayed? Your stream is 100% probably delayed, and it's because everybody's stuck in their house right now. Not stuck, but man, I don't want to go out there in that heat. We're not used to it here, so everybody's sucking up the internet bandwidth, and yeah, kids are home playing video games, that kind of crap. So my upload is probably crappy too. Okay, I made one on Tesla, but on Robinhood closed me out. At least it was for profit. Paid me 22. Yeah, nice. How come to close out something on a loss that costs more than... Oh, because, yeah, that sucks too. Yeah, so to close it out, it's because instead of... So, the reason it costs more to close out than your maximum loss, if you're going to close it early, things that would expire worthless, like that normally you would not have to buy back, like literally it's on its way down to 0, but you can never buy some. Nobody's going to sell you anything for 0, so you have to pay at least $1. And then on the other side, you're wanting to get rid of something, so nobody's going to take on risk for free, so you have to sell it. You have to let's see, when you're buying and then when you're selling, so you have to sell it for something or give that one away. So that's why it can cost you more than max loss. And a lot of times, and you'll see that like when you're watching price movement, it'll happen a lot of times where it'll show above the max loss. And it happens, and it's on all the platforms. It's not just Robinhood. With Robinhood's headache they give me, I'll always close them earlier now, but that stumbles me. Yeah, but Tastyworks does that, and I mean, honestly, on a butterfly, you probably should be closing it early. It doesn't really make sense not to, because your couple dimensions, right, are that time and that price, and as you're kind of moving along in time, and so you have your time and your price coming up down, and if you happen to be pretty close to expiration but your price is just perfect, you don't want to wait till the end, because then your price is probably going to move out. And like when you see that little peak there, and you're getting towards the end of the time, that's when a very small movement is going to cause it to not be valuable at all. And you could go from making a 200% profit to 0 profit like really quick. But Options Strat, if you guys have not checked this out, optionsstrat.com, this will show you like tons of different strategies that you can use, and it'll build it for you. Like, it'll give it a suggestion, but you can see what the profile is, and it graphs it out. So like when we're looking at let's see, we were looking at long call butterfly, and let's do that on CCIV. And so this is basically okay. This is centered. Wait, 25. That's kind of odd that that's at 25. But anyways, this'll show you what it is, and this will show you. This is your 3D, and this is your fourth dimension and time. So it's a little weird when you're first learning it and you're just looking at some of these things and how try to get like this graph or oh, we don't have that one up anymore, or when we're building it, that to correlate into what's going to happen. But this is a great starting point. So you can see, like, as at our times moving, this becomes more narrow, so we don't have to move as far to lose everything. So like initially we could move down to whatever 23.10 in this case, and we're still profitable. But if we wait till the very end, then we're losing money. But this is a super handy tool. And then this is the same thing. This graph is just going to be at the end, and then they let it slide. So this will kind of show you through time too. So you can see this is when you open it, and as time goes on, theta decays. You can see what that looks like up until the very last moment, and then it just becomes that peak. Have I tried, let's see, have I tried setting two of these in opposite directions? I'm thinking about doing it on Tesla next week if it comes down. Yeah, totally. I have. I was thinking, because I think a 630 and 670. Yeah, I think we'll see like the 650s, and I think we'll see a bounce off of that. That's where I think the consolidation needs to happen before the next leg up. Dude, awesome, man. I can't wait. So that is so cool to hear that you're just going to keep doing it until you master a strategy. Yes, 100%. Because when you get good at these, then you know, yeah, then you know what to expect. You know when you're down on it, like why. You know, as soon as you open up some of them, you can expect any move is going to bring it down, and then you also know how to manage it. Because also realize, like, when you have these on these four, when you have basically, I mean, this is three legs, but you could individually adjust two of the legs, and so then you'll learn how to adjust these things. So you'll be able to, hey, we can move this guy out, right? And then you know what it does, and you know what it does through time and how it changes everything. So you'll be able to move or manage your condors or butterflies and like react to certain things. So that'd be super cool. So you're gonna do, let's see, so you're thinking about, are you going to do two of the butterflies? $630 and $670. I should open up a butterfly. $653 is what I would do on my downside right now. But $630 might be pretty good. Yeah, that's a pretty good plan. Because then you can wait till it moves in one direction. I don't know what you would do, but like if I saw it come down, I think I'm thinking it's gonna be like the 650-ish. So that's what I would do. Wait till it comes down, close that one out, and then see if it bounces. My favorite strategy is credit spreads. Put credit spreads, 100%. I mean, butterflies are, I mean, it's more risk to reward for sure. And that's a cool thing is every single strategy out there, they're all fair. They're all absolutely fair. So like the one time you hit one of those butterflies dead nuts and you 5x'd your money, because you failed 4 out of 5 times, then everything is good. Tesla has room to go down to 636. It might, you think it'll, let me see. I need to get rid of all this crap on here. You think it'll move down below the breakout there? If I look at my, do I have my, yep, I do. Yeah. 616. Yeah, I mean we'll see. They had news come out too that they had a recall, in China, but it's all going to be software. I don't know if it's actually on the news here. Oh, there we go. Tesla addressed a safety issue in more than 285,000 vehicles in China. Tesla, and that's what the headlines are going to read, and that's what the algorithms are going to read. Tesla to recall nearly 300,000 China-made vehicles. And when you think like recall, that's always bad news, but it's actually just going to be a software update. But people love to make the terrible news out of Tesla for some dang reason. Says it costs $10 at 700. Obviously, market is closed now, but $10 for potential $500 is dumb. Yeah, I agree. Do it. And what's worse? So maybe you spend $30 and you still your upside is so good on playing both those butterflies. Butterflies are pretty cool, but also when you're looking at them, that upside, realize that happens on that last day. All that, and maybe you already know that, but all that huge, that big number, and we can jump in there. So yeah, I guess we need to go. Let's go back to the table. But that max gain, that's happening that last day. You're on this particular play, you're up 92 to 164, and the day before 69. So those last couple days, that's why generally you're closing them out sooner. So to be up, but to be up a couple 100%, can't complain. It wasn't just a software issue. That's what I read. I mean, then how are they're gonna fix it with a software update though? I currently have the 670 put, 675 call. I like playing the strangle and straddles for more profits. Yeah. Yeah, that's. When did you grab those? That was probably a super good Thursday open too. If I would have, man, I really wish I would have taken a step back and looked at the chart a little bit better. The yellow I did right before, on Thursday, was absolutely stupid after I looked at the chart and I realized that after hours. But I mean, a lot of my trades and a lot of the positions I get to during the day, between when I'm doing my real job and I guess I'm a victim to it just as much as anybody else. I see it going up, and for me, Tesla's always been the scary thing is when it just skyrockets out of control. And I want to be able to take advantage of that. But it was absolutely a stupid play that I made, and I 100% I definitely see the consolidation, and I'll bet you'll win on both of those. How do I pick my strike and expiration for my spreads? I don't have any steadfast rules, but just on recent price action and upcoming catalysts. So I don't. Yeah, I totally don't have any rules. I just pay attention to everything I can, and that's why I mostly play one underlying. I mean, I'll play some other ones, but probably 90% of them I was on Tesla, just because it's something that I follow every single day and every stitch of news that I can. I'm heavily invested into it, like into the stock itself. I have one Tesla. I've ordered another Tesla, and I'm in the middle of getting Tesla Solar as well. So like, just a company I love, and that's why I play it. But that's so I don't have any like one or two sentences I can tell you like how I pick them. I want a decent amount of premium. If there's catalysts coming up, I want to take advantage of that. And obviously I make a lot of mistakes that way, but I can usually go back and identify what the incorrect thinking was, and then hopefully learn from that, and then continue on. What's my real job? I do outside sales. And I also have that. I have an Amazon business. So this has been 100% purely for fun. And I originally, like a year and a half ago, I was like talking to friends and talking to like colleagues and stuff about just, you know, stocks and options, and I'm like, I don't have anybody to talk to about it. And I love like when people ask questions. That gets me hyped up. And actually, one of the girls in my office, she's just like, yeah, I was trying to get my Robinhood going, but like, what do you do? And so I was super excited. Nope. And somebody I had never connected with before. We don't have a good connection at all for some reason. Everything's awkward, but that always gets me hyped. So then I was just, you know, started posting some stuff, and then I started doing like these live streams, because this a year ago, or whenever I started doing them 6 months ago, I don't even know, was very uncomfortable. I'm not comfortable speaking to people, and then so I did it just to become more comfortable, get myself out of the comfort zone, and so now I super enjoy them. But I love having you guys. Like, I love having the questions, answers. I like being challenged. Like, there's plenty of things where people are like, hey, you're stupid, why are you doing that? Like, and with really good solid arguments too. When I opened up my my Palantir, when I bought these, this was actually super cool. And I think it was Jay Park or somebody. When I bought these leaps, these Palantir $20 leaps, that, by the way, I'm up $600 on. He like wrote like I don't know, like an essay like several times, like why this was a bad play. and I loved it, and the back and forth was super good, because I mean, the amount of things that we know are so little and so finite, and I realize that, and the amount of stuff we don't know is absolutely infinite, if we can even consider like language alone, how much language you don't know out there. So I'm totally open to being wrong and being educated, and I mean, the second I think I know, I don't know, even the majority of it, I'm gonna stop learning and be an idiot. But it was on this one, and just challenging me and made me rethink it. He's like, hey, instead of doing what you're doing, why don't you do this? And I kind of like ran through it and everything. So super helpful. But I'm very happy about these calls now, because even my original one, this is something I averaged down on. These are very long. These expire a little less than a year now, but I picked these up originally $820, average price $700 now, and I've been selling calls against these ever since I bought them. So this has been a pretty profitable trade, and Palantir is my second favorite company, and I want to own a whole bunch of shares, so I will likely exercise these. I bought the 670 put when Tesla failed to break above 688 on Friday around 11 a.m. Dude, nice, solid. I as soon as I saw it going back down, I realized my mistake. But as long as I learned something, as long as I learned something, lessons. I always think like education in any form is expensive, and when it's really expensive, like when it costs you a lot, you're never gonna forget it, right? So that's ingrained in my head. Hey, thanks, Cameron. Any opinion on Wish 9.8 put credit spread? Trying to collect premium off the volatility? No, I where is Wish at? Let me take a quick peek at it. Actually, I should look at the Robinhood chart. I think they're probably better for. I always forget because I don't use this. I think I bought these guys at IPO. They're actually up because I was like, hey, it's a company that I actually use. Nope, I don't like it. I don't like this chart. Good lord, that's ugly. I'll go to my other one. I was like, I bought some stuff off of Wish. Are they getting short squeezed, or are they just actually up? How long have they been out now? Good. Because I think I was like super super down on these, and then I just dumped it. I was like, yeah. Yeah, okay, so December. They just IPO'd in December. Yep, I think I probably bought them for $20. I mean, it looks like they may have found a bottom. Okay, so what do you have? I don't know enough about this to say whether or not I would play this. I think Wish is getting short squeezed if I remember correctly, and it may be somewhat of a meme stock at this point. I don't think it would be something that I would play. Oh man, stream looks like it's lagging. And then with yeah, I don't know, because it's had this huge. I don't know what the news. I don't know why it's up, but I swear something I was watching said. Let's see, when was that? 6-7. Let me see what news was. It doesn't even go back that far. I mean, they do say some stuff about meme stocks. So I would not put my money on a put credit spread on Wish. That's all I can say. Thanks, guys. I super appreciate it. I appreciate you guys like just showing up, and I mean even having the conversations back and forth and asking questions. I enjoy this so much. It's a good way to avoid the heat today. And I'm glad my AC is not like killing everything. So good thing let's see. Short squeeze Wall Street. Okay. Yeah, I particularly would not do. I don't know. I wouldn't do a put credit spread because you never know when they're gonna fail. You just nah. For me, no. Because those things, I mean, that's just going to be insanely volatile. And then there's no, it could be a complete, like, oh, surprise, all of a sudden we're dumped back down to $8. Do I ever put credit spreads on Tesla weeklies? Yep, I do. Everything is all kind of dependent on the price action and everything too. I actually think I had not this week, maybe a couple weeks ago, I even let some expire worthless. Before it was And I think part of it was just because it wasn't moving very much. I think it had quite a bit. So they were like super far out of the money. Wasn't sure what was going to happen in the near term future, so I just let them. But if there's a play, I probably have done it on Tesla, weekly, monthly. Um, I'm looking at like the June 2023 debit spread on them, a 900 1400. I'd like to get that. It cost about $7,000. I really wanted to buy it before this last rip up, and then I want to buy it in TD, but my funds hadn't cleared in time, and I should have just done it in Robinhood, which, I mean, it would have been up I think $1,000 so far, which has been pretty nice. What's up, ABCDE? Yeah, I think as far as like different plays, I've probably tried at least most of them. I haven't done any double calendar spreads. I've ran several calendar spreads. Actually, I'll go to that option strat. Let's see what we have not ran. But I also don't think you need to. I don't think I need to use all of them. I mean, I guess know they're available. It's nice. But I think like Puma Block was saying, like, keep doing something, master it, which makes sense. Or at least, or maybe a couple different things. Because the other part is, I know there's different plays that are going to be more successful in different environments. Like as far as like when the overall market's volatility changes, there's going to be things like put credit spreads are not supposed to be good in a volatile environment. It's not supposed to be good in this environment statistically. Let's see. I have novice. I like that they list them out. As a novice, I have done a long call, long put, covered call, and protective put. Maybe, no, I've not done a protective put. Short put, sure. Let's see, spreads, calendar spreads, diagonal spreads. And the diagonal spread is basically what everybody's now calling a covered call. Collar, use those. Strangle straddle, butterflies, condors, yeah. Except for I haven't done any, like an inverse condor or anything weird. There's one in here. What is it called? Expert. Is it a strip or a strap? I thought it was a strap. There's one in here that's pretty cool that I'd like to use, where it basically gets rid of any of the extrinsic value with a combination of options. So you can be bullish or bearish on a stock without basically paying for the amount of time that you're holding it. And I swear I think it was a strap. I think that's what it was. But there was like stocks like Nikola that I was very bearish on, and Neo when it was up so much. But the thing was, like, my assumption was we were headed down, but I didn't know a time frame. I was like, when is this thing gonna blow up? So to have something out there for that would have been pretty cool. But I think this basically gets rid of. I think it was a strap. Basically gets rid of the theta is what it does. Wait, what are we? We're an hour. Oh my god, an hour and 15 in. I think it might be time to go get some stuff done. Unless we have any other last minute stuff. Let me see. Same boat. Trying to find people to ask questions about stocks and options. Awesome. Yep, I think that is about it for me. I'm gonna get back to it, like getting some house stuff done and all that stuff. So hope you guys have an awesome rest of your weekend. If you're somewhere where it's like 1,000 degrees, like I feel like it is in Washington, stay cool. Yeah, and let's excited for next week and the coming weeks. But love you guys. Let's make a lot of money, and I'm gonna get going.